Imagine spending over 20 hours sifting through dozens of in-depth reports from Vanguard, Fidelity, BlackRock, and other top financial sources. At Nexus, we did just that on your behalf. Why? Because we know that an educated consumer is our best client. With that, we are excited to get into our economic outlook as we look forward into 2026. Today, we're going to be covering the Fed's ongoing supportive policy, cooling inflation, emerging sector rotations, and how lessons from 2025's year-end adjustments could shape an exciting and resilient path for markets in 2026. What's going on, guys? I'm Robert Montes, owner of Nexus Wealth Management in Missoula, Montana, and this is my economic outlook as we head into 2026. Overall, I'm genuinely excited for where the market's going. The economy has shown impressive resilience through AI-driven growth and policy support, and with continued momentum from corporate earnings and potential rate stability, many analysts see the S&P reaching 7,500 to 8,000 by the end of the year. Now, guys, if that is to happen, that would represent a roughly 9 to 16% upside from current levels around 6,900. So where's this optimism coming from? First, ongoing AI innovation and strength in the tech sector. This isn't hype, guys. It's actively creating high-quality jobs in software, data, and engineering while driving massive productivity gains across industries. For Main Street families, this translates to stronger wage growth potential and meaningful boost to your 401k as leading companies continue to invest and expand. Second, moderating inflation trends are finally easing towards the Fed's 2% target. Cooler readings mean your dollars stretch further on everyday essentials like groceries, gas, and utilities. This preserves real spending power, takes pressure off household budgets, and gives you more room to save or invest without feeling squeezed every month. And finally, we've seen resilient corporate earnings across a broadening range of sectors. Companies have been consistently delivering solid profits thanks to efficiency gains and steady consumer demand. For middle-class households planning for college, retirement, or the next family milestone, this underlying strength offers reliable growth opportunities and a sense of stability, in your long-term investments. Of course, nothing moves straight up, and markets always have their natural rhythms. We could see a few gentle pauses along the way from a couple of key areas that our team is paying attention to. The first thing we've been watching is high valuations in growth stocks, especially in tech and AI leaders that led the rallies last year. When prices run ahead of fundamentals, it's totally normal to get some healthy breathers as investors lock in gains or wait for the next catalyst. Second, tariffs will continue to create some uncertainties as new policies roll out. These could raise costs for some companies or disrupt supply chains a bit, creating some short-term hesitation, but without derailing the bigger picture. Second, there could be new tariff uncertainties as policies roll out. These could translate to a raising costs for some companies or disrupt supply chains a bit, creating short-term hesitation without derailing the bigger picture. And third, we're watching the labor market with unemployment edging up and hiring cooling just a little. This might signal a gentle economic slowdown, prompting the Fed to stay supportive, but it could also spark brief caution if job data continues to trend in the wrong direction. The good news, these are the kinds of pauses we've seen before, and they often set the stage for the next leg higher when fundamentals reassert themselves. So while we'll stay vigilant, I'm not losing sleep over them. They're part of what makes long-term investing rewarding. Guys, as someone who's right there with you juggling work, family, kids' schedules, and everything else, here are the two key takeaways I want you to walk away with. First, do a diversification check. While we expect good things ahead for US stocks, being diversified lets you capture opportunities outside domestic large caps, like in international markets or small companies that may outperform at different times. Second, show up your fundamentals. Look at your emergency fund, set a time to review with your advisor over Q1, and make sure that you're not inadvertently missing something simple. This is kind of like changing the oil on your car. A little bit of prevention goes a long way and can make a huge difference. And whether you're a busy professional, a mom who's balancing career and home, or just want a fresh, no pressure look at your personal investments or your company's 401k plan, reach out. My team at Nexus would love to help you build a strategy that lets you thrive and not miss out. Send me a message or feel free to check us out online. Thank you so much, guys. Talk to you soon.